Hey everyone, welcome to another episode of Investing Kev. In today's video, we'll take a look at ChargePoint, ticker CHPT, which is the world's largest network of electric vehicle charging stations in North America and Europe. When you take a look at the EV industry, you not only have to look at the vehicles, but you need to look at the infrastructure to help charge these cars up. We'll take a look at ChargePoint's company overview, their financials, their outlook, risks, price target, and final thoughts. Just as a reminder, my videos are timestamped, so you can skip the company overview if you already know about ChargePoint and go straight into the financials. Check the description for the timestamps listed. If you like this video, please give a thumbs up and please consider subscribing. This channel is growing and I'm super excited to dive into these different stocks while also providing any financial thoughts and opinions. Feel free to follow me on Twitter at InvestingKev and reach out to me in the comments. I've enjoyed the discussions we've had in multiple videos. I've learned a lot from a few viewers so far, and I want this to be a community where people can engage with one another. With all that being said, let's learn about ChargePoint. For more than a decade, ChargePoint has been singularly focused on enabling the movement of all people and goods on electricity. Today, ChargePoint is facilitating mass electric vehicle adoption as one of the largest charging networks in the world, with a strong leadership position in North America and a growing presence in Europe. ChargePoint is a market leader and has helped pioneer networked fueling, offering one of the industry's most comprehensive portfolios of hardware, software, and services for commercial, fleet, and residential customers. Businesses, fleets, and drivers turn to ChargePoint team for EV charging education, resources, and technology as they look to participate in the new fueling network. ChargePoint has more than 4,000 commercial and fleet customers and has delivered more than 87 million charging sessions to date, but this is just the beginning. With the total cumulative investment in EV charging infrastructure in the United States and Europe expected to be $60 billion by 2030 and $192 billion by 2040, ChargePoint's established business model, comprehensive portfolio for nearly every charging scenario today, recurring revenue, and growing customer base demonstrate it is well positioned to continue to lead as the electric mobility revolution accelerates. In looking at the ChargePoint numbers as of April 30th, 2021, ChargePoint has 7 times more market share in networked level 2 charging than the closest competitor in North America. It has 5,000 commercial and fleet customers worldwide, and it's growing, including 62% of Fortune 500 companies. It has over 112,000 places to charge on the ChargePoint network in North America and Europe. To this date, it has over 92 million charges delivered and counting. Drivers plug into the ChargePoint network approximately every 2 seconds or less, and 387,000 metric tons of greenhouse gas emissions have been avoided to date. ChargePoint says their winning formula is based on 3 segments. You have the hardware segment, which are the charging ports themselves. You have the software segment, where the software is tied to the charging ports themselves, as well as their mobile apps connected to people's cars and phones to show their locations across the country. And you have their services segment, where they have their parts and labor warranty. ChargePoint's complete hardware portfolio is powered by their software. Their comprehensive hardware portfolio delivers solutions for every use case of all vehicle types and brands. Their high efficiency in power and footprint, their modular, scalable, secure architecture is designed for serviceability, their unparalleled quality, their advanced testing for vehicle, functional, climate, and environment for long-term reliability, and their options for site hosts to use custom branding. And their software enables control of who can use stations when, all vehicles to get charged on time, multiple vehicles to share power, drivers to get in line when ports are occupied, their proactive and remote diagnosis, and their power management to avoid demand charges. ChargePoint is already integrated to the ecosystem. If you look at their software, you can see that they have automotive platforms on car screens. You have the consumer platforms, which is on mobile and Google Maps and Alexa. And also you have their fleet platforms using their Voyager cards and roaming integrations with other charging networks such as EVgo, Flow, and Greenlots. And thousands of brands choose ChargePoint. These are select customers participating in the new fueling network. In the commercial segment, you have 3M, you have Daimler, you have GM, Microsoft, Pixar. In healthcare, you have Allergan in Swedish. In fleet, you have FedEx and IKEA and PepsiCo. In residential, you have Brookfield Properties. In education, you have Stanford University, you have Columbia University and Rutgers. In hospitality and retail, you have Disney, Kohl's, Marriott, Safeway, Hyatt, Walgreens. In fueling and convenience, you have 7-Eleven, Chevron, Come & Go, Maverick. These are companies in all different industries that are utilizing ChargePoint's network, which is massive for them. Taking a look at ChargePoint's revenue, you can see prior to 2020, they were increasing the revenues every year. In 2017, they went from 62 million to 145 million in 2019. In 2020, they were impacted by COVID, but that's not worrisome because the overall trends show a company that's growing. Looking at their future expected revenues, they're expected to reach nearly 2.1 billion in 2026. Their revenues coincide with their shipped charging ports. If you take a look at the chart on the left, they're going from 50,724 ports by the end of 2021 to over 425,000 in 2026. ChargePoint is diversifying their portfolio as well, both globally as well as their portfolio offerings. Looking at the revenue diversity, we can see their North American commercial revenues in blue, their European commercial revenues in orange, and their global fleet and other in gray continue to expand every year. The North American diversity by 2026 will still be the largest, but look at how much the global fleet will take up. As the world moves toward renewable energy, countries around the world with much faster growing middle classes will have much higher ceiling for ChargePoint to expand and grow. ChargePoint's gross margin will continue to improve as product releases stabilize and their software revenue grows. Gross margin is the revenues left over after deducting operation costs. It's great to see a gross margin improve yearly as they'll reduce any inefficiencies within their production and as they continue to improve their software updates. You can see the growing trend where in 2021 they're going from 31% gross margin percentage all the way up to 42% in 2026. Financially, ChargePoint seems to be on the right track to sustain being a profitable company. And just recently, ChargePoint has bought a European charging software startup for $295 million. The article says that ChargePoint struck a deal to buy a European charging software company has to be for $295 million. For $295 million in cash and stock, the electric vehicles charging network's first acquisition since it became a public traded company. Through the deal, ChargePoint gains more than just 125 employees and the company's operating software, which manages more than 40,000 networked ports in Europe. The acquisition will give ChargePoint a boost in its pursuit to gain market share beyond North America, as well as VW Group as a strategic partner. Looking at ChargePoint's outlook, they have an investment highlights section where they present their case for why you should invest in ChargePoint. The first point is their massive total addressable market. The electrification of mobility is happening at record rates, presenting a tremendous addressable market for ChargePoint. EVs are projected to be 9.9% of new vehicles sold in 2025 and 29.2% in 2030 in the US and Europe combined, which is compared to 2.6% in 2019. A cumulative EV charging infrastructure investment in US and Europe is projected to be $60 billion by 2030 and $192 billion by 2040. Within a 10-year time frame, they would have 3 times that amount from 2030 to 2040. ChargePoint has a winning portfolio and business model. Their revenues are directly proportional to EV penetration, monetization, and not tied to energy utilization. They have one complete, vertically integrated, software-defined and worldwide product portfolio of network solutions for commercial, fleet, and residential customers wrapped within turnkey support services serving many segments and geographies. They have diversified revenue stream of hardware plus high margin recurring software subscription and services. ChargePoint has a strong competitive moat. They've been doing this for over a decade, and ChargePoint has been fueled by a significant amount of capital raised from established investors, powering a successful R&D and go-to-market engine. And with ChargePoint doing this for more than a decade, they have a strong network created by deep ecosystem integrations and an open network with a broad reach. Another point is that they have capital-light growth. They're expanding their customer base of 5,000 commercial businesses that include 62% of 2018 Fortune 50 list of companies. The great thing about ChargePoint, they have minimal capital expenditures required to scale. Since customers own the charging sites or stations, ChargePoint focuses its resources on product development, customer acquisition, and public policy to drive innovation, competition, and customer choice in the market. And ChargePoint is led by an experienced leadership team. They have seasoned executive leadership team with many decades of combined experience in technology, mobility, and emerging sectors. And to this date, ChargePoint has 2.6 billion electric miles enabled, avoiding more than 107 million gallons of gas, more than 312 million kilograms of CO2, and approximately 387,000 metric tons of greenhouse gas emissions avoided. I also want to share a few more slides about their outlook. This slide shows a list of companies that use ChargePoint, as ChargePoint has a vision to move all people and goods on electric power. If you take a look at the bottom, you'll see a trend of many logos that are legacy brands. You have Audi, BMW, Ford, Honda, Toyota, Volkswagen that are currently releasing their electric vehicle models or will very soon release EV cars. This is massive, and I really believe it is underestimated how big ChargePoint can be as a company. Looking at this slide, these are major markets committed to electrification. You have Alphabet, also known as Google. You take a look at oil and gas and have Chevron and ExxonMobil, which realize the future of oil will be transitioning over time to renewable energies. You have Lyft and Uber, which have a bunch of cars around the world on the roads every day, constantly, pushing for electrification and reduction of emissions. The government paves the way, but having institutions showing a commitment will definitely bring a cultural shift in driving habits around the world. Taking a look at risk factors, in my opinion, it comes down to two main risk factors. The first one is government. The entire electric vehicle industry faces government risk because these governments are the ones who ultimately determine the future of renewable energy. For example, if you take a look at countries in the European Union and China, their governments have made a strong push for EVs. Here in America, you have Joe Biden who said electric vehicles are the future and there's no turning back. ChargePoint states that the reduction, modification, or elimination of rebates, tax credits, and other financial incentives from governments, utilities, and others to offset the purchase or operating cost of EVs and EV charging stations could cause reduced demand for EVs and EV charging stations, which would adversely affect ChargePoint's financial results. In my opinion, I think it's too late for a lot of these countries to reverse course. If your government says that they're serious about climate change and will do their part, it would be really embarrassing to backtrack and go from electric vehicles back to internal combustion engines like we have now. These governments will be pressured from local citizens and other countries to do their part to reduce their CO2 emissions. The second biggest risk factor is competition. ChargePoint currently faces competition from a number of companies, particularly in Europe, and expects to face significant competition in the future as the market for EV charging develops. ChargePoint states, for example, Tesla continues to build out its supercharger network across the United States for its vehicles, which could reduce overall demand for EV charging at other sites. And also, third-party contractors can provide basic electric charging capabilities to potential customers seeking to have on-premise EV charging capability as well as home charging. There may be a company that comes along and offers better pricing in regards to hardware and software, which would force ChargePoint to remain competitive and reduce their costs, thus reducing revenues. And as more companies pop up, they can definitely chip into ChargePoint's market share. I want to share a clip of the CNBC interview from last month interviewing ChargePoint CEO Pascal Romano. The major headline from this video is that the global nature of EVs could not be more critical, says ChargePoint CEO.
To what extent are you watching what's happening globally in EV adoption, and how much do those other markets affect how you invest and how you strategize about your growth?
Well, we're investing heavily in Europe, in addition to North America, and then we're also investing heavily in the emerging fleet segment, which is a global business for us as well. So we not only watch it, we think it's critical, and here's why. The auto industry is one where it cannot bring the platforms locally to a market that are too distinct because the R&D support for that is challenging, and obviously you get economies of scale when you can sell into more than one market. We have the same exact dynamic in our industry and virtually every other. You need global scale to be competitive, to drive the R&D that you need to drive to support it. And more importantly, we need to be well integrated with auto OEMs, in-dash experiences, and the ecosystem around that. And they're going to introduce those platforms globally. So the global nature of this cannot be more critical.
Taking a look at ChargePoint's current target price, it is at a price of $25.96 as of closing on July 21st. 6 Wall Street analysts have given a strong buy, with an average target price of $38.67, which would be a 48.96% upside. There's an analyst who's given a high of $46 and another analyst who's given a low of $29. In my opinion, the future of ChargePoint is really bright. This is a company that's been around for more than a decade and has an established network of charging ports already in North America and Europe. The EV industry is trending upwards, and the projections in 2025 to 2040 are massive. There are new EV auto manufacturers around the world competing against Tesla, and legacy brand cars will be rolling out their EV lineups. I really believe there is no turning back now. Climate change is a huge issue, and these countries have to respond accordingly. There will always be a demand for charging stations across the country. Not everyone can afford home charging, and people will be going on road trips, different cities for work, and will need to fuel up. ChargePoint's financials are looking great and trending upwards, projecting to be in the $2 billion range in revenues in 2026. They'll have over 425,000 ports shipped in 2026 compared to almost 51,000 currently in 2021. Competition will pick up, but ChargePoint has an established relationship with over 60% of the Fortune 50 companies. There are major brand names that use ChargePoint, and their moat is increasing because right now they're the dominant market share. Sure, competition will arise, but it will take a lot from the other companies to drastically take a huge chunk of the market share from ChargePoint. In my opinion, this is a long-term hold and can definitely provide some diversification within the EV industry, as instead of solely being invested in EV auto stocks, you look at other crucial pieces of the EV industry and focus on the charging side of things. Thank you everyone for joining me. If you like this video, please give a thumbs up and please subscribe to this channel for more content like this. If you're fascinated by the EV industry, I highly recommend checking out my 2 recent EV auto stock analysis in Li Auto and Xpeng Motors. As always, take care and I will see you all next time.